What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to cover some other notable names on the market, such as QQQ, Apple, NVDA, AMD, Tesla, and Amazon. Now, before we jump into the levels and price targets of these stocks, let's go ahead and talk about some things that happened last week and some things that are happening this week that could potentially send us higher. First things first, the most important report that came out last week was the PCE report, which measures inflation. In fact, the PCE report is the Federal Reserve's preferred gauge of inflation, and so we desperately needed to show that report that inflation is coming down, and it came in exactly how we wanted it. Inflation did drop from the previous months at 3.4% to 3% in October. So this is a good sign. Remember, the Federal Reserves were very adamant about the fact that they will be using data to decide whether to raise interest rates again. And so far, data is on our side, and it's looking like we won't need to raise interest rates again to further control inflation. Inflation is coming down towards that 2% target. It is now at 3% from a very high of around 9%. So overall, we're moving into the right direction as we close out the year and move into 2024. Now, another major report that came out last week was the Q3 preliminary results for the US GDP, and you can see that it was far stronger than the previous quarters, and it is also questioning the narrative of the recession. So remember, everybody is fearful of a recession. A recession is two back-to-back quarters of negative growth, and you can see that throughout the entire year. For the last 4 quarters, we have been posting positive growth. So overall, we are moving in the right direction. So this is good news because for the longest time, every rally that the stock market has had over the last 12 months, it didn't have that reinforcement and the backbone that could potentially make it last. But for the first time in quite a while, we have a lot of positive news and a lot of positive catalysts that are reinforcing this market rally and helping people move back into the market. So something major that happened last week is SPY reached a new 2023 high, and so did the Dow. We can see that the Dow and SPY reached new highs for the year, which is an awesome task or feat to accomplish as we close out the year. One other thing that we noticed last week was IWM, which is the small cap ETF index. This is the Russell 2000. Also saw a tremendous amount of buying. Small caps are usually the last to move during a bull market. And that's because most of the time when the market starts rising again, people put their money in strong fundamental companies, and then they start moving into the higher risk or the lower cap companies. And here last week, we saw that happening right in front of our eyes. SPY and technology stocks such as Apple, NVDA, and Microsoft, they pulled back. They still kept a bullish trend. They pulled back, but the money that came out of them rotated into small and mid caps, which is very healthy to us because that's what it takes to hold a bull market up. We can't just have money going into one side of the market. We need money to spread out throughout the market. That way the entire market gets lifted and not one side is holding the entire market up. So now with all that being said, let's go ahead and jump into SPY and talk about what we can expect for the week ahead. First things first, as we already mentioned, it was kind of a slow week last week. We did say that if we did see SPY movement, it's going to come in the later parts of the week, and we can see that yes, indeed it did. On Friday, SPY managed to push and close just below 460. Now, when we're looking on the daily, we can clearly see that there's a breakout happening. There's a ton of volume in the market, and although the RSI is suggesting that this may be overbought, this is absolutely not overbought yet. The RSI here is indicating a lot of strength, and we do expect this rally to continue going. Now, here are some levels to focus on for SPY. When we look back last week, you can see that most of the week stayed flat, but I'm going to show you a pattern here, and this is the exact pattern that happened on this breakout. The SPY broke out here, pulled back to retest that support, and continued its rally higher over the next several days. Here in this case, we once again see this breakout above this resistance. SPY comes back to retest, and it's looking like it's going to push higher to our next target of around 462. And above 462, we do expect it to move towards 465. Now to the downside, we will remain bullish on SPY as long as it holds that 451.90 mark. But if it breaks below, there's still some breathing room. It can get ugly below that 447.70 mark. This is a very aggressive downside price target. So if we do see it this week, I'll be very surprised. But either way, we will be updating this again in the coming videos. So make sure you're checking back in. Now, when we are looking at triple Q, we can see that triple Q is also flirting with its 52-week highs. It tried to reach those highs last week, but pulled back because Google and Microsoft had major pullbacks. So that did not help the tech index. However, we can see that overall, triple Q is holding a very strong bullish trend. A small pullback shouldn't make you change your entire outlook on the market. Pullbacks are very natural, they're very healthy, and they are part of any healthy market. So if you are looking at triple Q, you want to focus on that 10-day moving average. Every day that you open up the market, the first thing you should focus on is where did triple Q open in relation to that 10-day moving average. If it opens above it, the market is strongly bullish. If it opens below it, then triple Q is strongly bearish. Here are some levels to focus on for triple Q. First support is going to be right around 383. If it breaks below that level, then we do expect it to begin filling this gap down towards 378. But we will remain bullish on triple Q as long as it's at the top of this breakout. You can see that throughout the entire year of 2023, triple Q kept getting rejected at this point. And so as long as triple Q is holding this point, so even if it comes all the way back down to 367, pulls back, and then gains momentum to move back up, we will remain bullish as long as it's holding this trend line. Now, there are far too many supports before that trend line for it to reach it this week. The furthest down we expect it to go this week is going to be right around 375, and that is assuming it breaks 383 in the first place. We are bullish on triple Q above 383, and our next breakout target is going to be above 394.15 for a price target of around 401 to 402. The next stock on our watch list is going to be Apple. Apple pulled back last week, but buyers, they did not wait 1 second. They stepped right in and bought it right above that 10-day moving average. So overall, we can see Apple forming this bullish flag on its daily. Overall, a very bullish pattern. Apple's next resistance and focus for us is going to be right around 192.93. This was the most recent rejection that it faced before it pulled back. Obviously, the support here is at 188.15 because this was the reversal point. Above 192.93, the breakout target is going to be right around 196. The next stock on our watch list is going to be NVDA. And if you've seen our videos in the recent weeks, we have talked about the fact that NVIDIA is expected to move sideways or pull back after its most recent earnings, and that's because option premiums or market makers want to crush the option premiums that did not give their calls enough time till expiration. We are still very bullish on NVIDIA, but this is a game that market makers love to play. Anytime a very hot company is reporting earnings, they know that many retail buyers are going to step in and try to get a very large move on those calls, and so they will keep it flat for weeks to follow, and then they will make it move after the majority of those expirations go out of date. So for NVIDIA specifically, we are expecting the stock to keep consolidating up until the second part of December and into January. That's when we expect it to start peaking back above 500. We are still very bullish on NVIDIA, and here are some levels to focus on. First of all, if you are hoping for any kind of move back towards 500, you need NVIDIA back above that 483.75 mark. Above that level, we have a price target of 495, and above that, this is our second price target. To the downside, NVIDIA may keep pulling back. The next support it has in focus is going to be 461.95. A break below that level has a downside price target of around 449 to 451. The next stock on our watch list is going to be AMD. AMD is one of the strongest stocks on the market. However, you can clearly see capital rotation as tech stocks have pulled back. Money started moving into the small caps like SoFi, small caps, or companies that may have not seen enough movement before like CRM. So you can see that money is not flowing out of the market, it's just flowing into different sides of the market. So as AMD pulled back, stocks like CRM, stocks like Zscaler, they started moving up. And so for AMD, you can clearly see that this 20-day moving average is acting as a support right now. AMD has used the 10-day moving average as a support for the longest time during its rally, but for the first time it's retesting the 20. We are expecting it to push back up above that 20. The first thing you should do every day as you open up your charts and at the end of every day is you want to see where that daily candle opened and closed in relation to these 10 and 20-day moving averages. Here are some shorter term charts to focus on for AMD. We are bullish on AMD as long as it stays above that 118 mark, which is also right around that 20-day moving average. If you are bullish on AMD, you need a breakout above 125.73 for a continuation towards 128 to 129. Now to the downside, the most critical support AMD has is going to be around 112, but we would like to see it hold that 116 to 118 range to remain the strongest bullish level that it has. The next stock on our watch list is going to be Tesla. Tesla faked people out last week after the release of the Cybertruck. You can see that it broke above this long forming pennant pattern, but you can see that it moved right back to it over the next few days, unfortunately. However, it's not unlike Tesla for them to use fake outs on breakouts in order to maybe trick some traders or trap some traders. And so for Tesla, we are still strongly bullish. Although it dipped back into this pennant-like pattern, the stock is still expected to move up, but it will do so in a very choppy way and when you least expect it. For example, this rally right here on Tesla was on a day in which SPY and the overall market was pulling back, and that's just how Tesla moves. It is one of the trickier stocks. So if you are looking at Tesla and you're taking on calls, make sure you're giving yourself plenty of time on those calls. We do consider late January, even February for expiration. To the top side, Tesla will need to break above 250, 275 in order for it to break out towards 257 to 258. And above that level, our second price target is going to be between 268 to 270. The next stock on our watch list and the final stock on our watch list is going to be Amazon. Also, one of the strongest names on the market. We're going to show you how that 20-day moving average was key for Amazon and how you can expect it to play out for AMD. We can see that Amazon has been using that 10-day moving average for its entire rally since its earnings, and then for the first time it dipped to retest the 20 and bounced right at it, which is exactly what we're expecting for AMD here. Now for Amazon's shorter term price targets, let's go ahead and talk about its charts. Amazon did dip below this trend line here one more time. However, you can see that it held this trend line that it's held for the last two times. So we're going to move that trend line here, and as long as Amazon holds this trend line, we are bullish and holds the 144.30 mark. We do need a breakout above 149.35 for a price target of around 151 to 152. If it breaks below 144.30, it has a support at 141.50. Below that point, we would consider shorting or playing puts on the stock. But even if it enters this level, and that goes for almost the entire market right now, apart from energy stocks, we would not dare swing puts on any of these stocks. The overall market is still very bullish. We are expecting new highs to be made, so swinging puts is going to be very risky overall. The trend is your friend, so make sure you're following the trend. Thank you guys so much for checking in, and good luck with your trades.